Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 2nd of October, 2018. Now, I'm putting this out early. It's 1:50 p.m. We can certainly get a lot of other changes, but that's not going to change where the settlement price in gold has come in and the other metals. And they're going to be right in this general area, okay? They haven't moved very much since 12:30, and that is the time in Central Time where the markets determine the settlement, although they will trade to 4 o'clock. The interesting part of the day is more strength in the dollar and more weakness in the euro. Now, it did get away from the lows. It cracked through the 116 area. And this is all about Italy. Italy is taking on the European Union. Remember, the two parties that made up the new government coalition, the Five Star and the League. They're keeping to their promises of more spending. The problem is it could put them in a situation like Greece where you spend, 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 but where's the revenue? And there's a problem. There's a battle going on there. That's one of the elements. Of course, you've got in the British pound the continuation of the saga of Brexit. But if we go to the gold market and we just see what it's done, you're getting the market to stick its head up. Now, 2 weeks ago, I wrote my gold report, and I labeled out some numbers. And the one thing that I said is you got to be careful. You've got Bollinger Bands, and I'll show them to you in a minute here, going sideways, and you get up to the top band, you fail. You get down to the bottom band, looks like you're going to get under it, it whips back up. Today was the whip-up day. You'll see what I'm getting at. But in the gold, you've got this sideways action basically taking place, and it's been doing that. If we come back here, it was peaked right here this week, and that would have been August 24th. So you can see how the market just dipped, started coming back, and that's basically what you're doing. You're just marching back and forth, whipping the market around. When you go to a daily bar chart, you really see this. Now, this was a downside breakout the past 2 days, actually, and then it stalled out yesterday, and now the market's coming back up into the range. You had a pattern. I'm going to take today off the chart. You had lower highs, lower lows. That's bearish. As I said yesterday, what would break that pattern is taking out 1207.90, which it did today. So now you don't have a chart pattern of a trend. You have a lower low and a high that's taken out a previous high. I always look to see where that line in the sand is, that 18-day average of closes. And we tried to get away from it, and frankly did. And we didn't hit it for 2 days. We went right back to it today, which is fascinating. Remember we're talking about Bollinger Bands? I had written my gold report, and we were in this area, and I said, you know, you got to be careful. The market tries to break out to the upside, tries to get out to the downside, and traders are getting spit out because you're betting or trying to bet that the market's going to have follow-through. Here you get a big day down on Thursday. You come back right into the band on Friday. I would say the resistance still at the 18-day average. The market slips back to the lower band yesterday, watch this, and today it takes off to the upside. So those that had tried to play for that downside got knocked out. And what I think happened today is I wouldn't be surprised that the pros were selling this market short at 1202.20, and they blew themselves out when you made the higher high, and now they're scratching their heads saying, okay, potential resistance back at 1214, now the support's 1190, and again, a market that's just not following through, and that's how I'd label it. Momentum has turned up. You can see that in the slow stochastic. It's pointing up now. Bias is up because you're over the 18-day average of closes, but you're void of trend. And if you really look at it, you moved out the Bollinger Bands ever so slightly. You're still staying within them, though. Where it's a cleaner picture is the GLD ETF. The action today, this is how you looked coming in. You really had lower highs, lower lows. Again, To get to the 18-day average, you had to take out yesterday's high, and that number would have been 113 even. Got that? It's right through here, and you see it over my shoulder there, which means the 18-day average in this case most likely was not a sell for the pros. Market came down, and now today, off to the race. I think they captured the shorts, and this market is in an uptrend now. Why? Bias up. Higher lows, higher highs, resistance, the upper Bollinger Band, about 70 cents higher, 114.45, with support, now I haven't said that in a while, support at 113.37. GDX, the miners, on this run-up it had right here, you pulled back, challenged that 18-day average, and you're keeping that wave alive with higher lows, higher highs. Unlike GLD, the market is overbought. I'm looking for resistance, 1924. But it's the first time that I've been able to talk in a long time that GDX and the gold ETF are in uptrends. At the same time, the silver, while it had a bounce yesterday where gold gained on silver, silver's gained back a little bit today on the gold. Now, the silver market is pushing on and trying to keep the upper Bollinger Band moving higher. It's not doing a great job of it. When the market poked sharply higher today, I know I stuck my head into the office. I said, watch out, guys. It may not be able to hold that much above the Bollinger Band. And by day's end, I'm not too far off from that. It's about 4 cents above it. It was way beyond that. It is a market that has got sideways action in terms of momentum. It's overbought, fighting its battle at the upper Bollinger Band, but in an uptrend. In the copper market, I don't know why today the copper market took off, but it did. And it too gave back a chunk of those gains. It got itself up to a high of 281.30, and it's off about 80 cents. But you can see the market has done an interesting job of staying over the 18-day average of closes. It is very overbought. It is not screaming, buy me, buy me. It's got resistance, 289.95, the 100-day average, and 288.50. Support back down here at 271.70. In the platinum market, you would come down after this rally, and you know how we talk about that line in the sand. You look and tell me what this market did. Went there approximately 3 days, moved back up. Is the market trending? No. You've got a higher high and a lower low in an overbought market. Resistance right overhead, the combination of the 100-day average at 848, 847.5, the Bollinger Band. The market that I think, and I wrote in my report for my customers, said you got to be careful now of palladium. It had been my friend during this whole rise, and if you look at the videos, I said it's the strongest of the metals. I now think it's one of the weakest, and that's because you lost the embedded reading. And yesterday you saw that coming when the market settled like this, and on the open last night it was Katie barred the door. So I think that you can settle back here. Now, settling back does not mean I'm a bear. I'm not. I still see a market with higher lows, higher highs. It's lost its upside momentum, which often, it is not always, which often leads to price in the 18-day average trying to visit each other again to find out what's next. In the dollar index, this is your resistance area. You've got higher lows, higher highs. So it was interesting that the dollar's been able to gain, silver was able to gain, and that the dollar suddenly overbought. Will the dollar be able to mount anything from here becomes the question for traders. What I teach is I think pros take money off the table the first time you hit the upper or lower Bollinger Band after a move, and that's what you have, plus you're overbought. You hear me talking about all these technical indicators. If you don't know too much about them, we've put together 2 booklets, and we made them in PDF form that are full of color, like you're going to see behind on the screen, and it covers one thing after the other, the different types of price charts, common patterns, trend lines, how you draw them and how traders work with them, moving averages, the different oscillators. I like the slow stochastic, but there's others. Some people like market sentiment, open interest, things of that nature, the CFTC reports. I like price-time relationships. I always pay attention to that. Options, primers, money management. We put it all together, simple reading, great colors, all with graphs. How do you get it? It's real simple. You give us a call. You can go to our website at www.iraepstein.com. you can click up here. Remember, this is from our good friends at Modern Trader Magazine. With that, I'm Ira Epstein. You have a good day.